Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Monday, June 3rd, 2013. Well, a change of trend to the upside today. The candle that we're examining is this second last candle on the chart. That last candle is still developing, and it is developing as a bearish candle at the moment, but that doesn't mean that it will finalize trading as that. But the last candle here is quite a bullish candle, and as I've mentioned, a change of trend to the upside and quite a change of sentiment in this market. A candle with a higher high and a higher low, and a candle with a very large white body. And if we look back at all of this trading, it's been some time since we've seen a body that size, and that does suggest that there has been quite some change of sentiment in this market. The buyers have made a substantial amount of net bullish progress on the day between the open and the close, and suggest that this market may be destined for higher levels. A limiting factor here, however, is the fairly strong resistance that extends roughly from about this 98 level, where we saw this indecisive trading begin, and that level extends in a zone up to the 98.59 level, a previous level of strong support and resistance, and that will be a very important barrier for this market if the trend does continue up. To the downside, we do have very strong potential support down at 96.62, and if we look at all the trading prior to today's candle, there was quite a fair bit of downside price rejection from that area. Now, importantly, however, when we look at the amount of times that 96.62 level was held as resistance and we had rejection from there, this bullish close does really say something about a change in sentiment, and it does suggest that the buyers are now coming into this market in a much stronger manner than they were previously, and does suggest higher levels. But we do need to watch 96.62 as a potentially strong area of support now that it has been breached, and a previous strong area of resistance can very quickly turn into a very strong area of support. Below there we have strong support extending down to 95.81 and 95.36. In terms of the current candle with this large body also, we've seen the market close up towards the high, suggesting that the buyers have closed with very strong control, and that they've been very strongly committed to taking this market higher today, so we do need to watch that. At the moment, I've mentioned that we do have a black body that's forming in this current candle, so we do need to be aware of that, and there is a possibility we could see the market test at that 96.62 level in a zone around the 97 level there. In terms of the Fibonacci extension, and now that we're in a first time frame uptrend, we're examining the relationship of that to the previous time the market's trending up, and we've traded in a strongly bullish manner up above the 100% level, and there is good potential for the market to test up to the 161.8% level at 98.21, and that coincides with this attempted rally where we saw some indecisive candles and then a very strong sell-off. So roughly around that area there should be very strong resistance. And if the market does test up to there, let's observe the market and watch if we do see some selling coming in around that area. In terms of the Fibonacci retracement, we're in an expansive mode of that, and here we've seen the market test to the 161.8% level and be rejected from there, but on a very strongly bullish candle. It does suggest that this market may trade to higher levels, and it suggests that if we can trade through the area around this 98.41 zone, we could see the market potentially trade up to the 261.8% level around 99.35, and that coincides with the area around the Kijun-sen at 99.57, so a very strong area of resistance up around there. In terms of Ichimoku, obviously a bearish market in the long-term time frame, with the market trading down below the cloud. The market has been trading quite a fair way down below the cloud, and suggests that the market is looking overextended, so it's little wonder that we have seen some decent bullish activity come back into the market, and the market attempting to retrace back towards that equilibrium. We've also seen the market trading below the Kijun-sen, so a bearish market in the medium-term time frame, but that has been pointing flat for some time, and here we now once again see the market retracing back towards a flat Kijun-sen, and that is quite a reliable indicator when we see a flat Kijun-sen with the market attempting to meet the equilibrium suggested by that flat Kijun-sen. But also importantly here, looking at the Tenkan-sen, the market has closed in a bullish manner above the Tenkan-sen, giving us a bullish market in the fast-term time frame. And looking back here, it's been quite some time since we've seen the market trading in such a bullish manner above the Tenkan-sen, and suggests that there could have been quite a very substantial change in sentiment in this market. So basically, moving forward with this suggestion of a change of sentiment, let's look to the high of the current candle for a potential higher high and higher low, and watch how the market reacts in this zone extending up to the 98.59 level. But if we do see the market continue to come off as we've seen for the start of trading today, then we should see some very strong support around 96.62.